Hello friends, today we are going to talk about digital lending reforms. Now, with the penetration of technology and with the onset of fintech revolution that has taken place in India, and also the banks have started moving to digital platform as far as lending is concerned, and many NBFCs have also joined. So as a result of which there has been a spurt of digital lending activities in India, and over a period of time it has precipitated into some kinds of regulatory concerns about engaging of outsourcing agencies, misselling, non-transparency in pricing of the products, and the instances of harassment by the recovery agents from the borrowers. So this has started causing a lot of concern, and RBI wanted to regulate the digital lending in a much more sophisticated and systematic way. So as a result, RBI has set up a working group was on digital lending, including lending through online platforms and mobile apps. So that is the name of the working group. Now that working group has observed that there are about 1100 apps, digital lending apps in the market, which are calibrated according to the algorithm and the logistics that are customized to the lenders, and not much of transparency is available. But the good part of it is the digital lending is faster, and borrower is able to get the loan very quickly, and the processes are very much simpler, as a result of which many of the borrowers opt for digital lending, that is availing through digital platform as far as the loans are concerned. And most of the smaller loans, say retail loans, small vehicle loans, two-wheeler loans, and small business loans have moved to digital platform because of the convenience of the borrower as well as the convenience of the lender. Now, if a bank branch in the brick and mortar system is giving a loan, it costs about rupees 5,000 rupees till the time of origination and also collection of the loan. This is a whole process of lending of small loans at the branch. Whereas on the digital platform, it works out to a few hundred rupees. So that is the comfort as far as the lender is concerned. It works out very cheaper for the service providers. But most of the lenders under the digital platform, they use the agents, lending service agents, for the purpose of some of the activities of what you call due diligence and spot verification, or any kind of pre-checks that are required for the purpose of taking a credit decision. So there is a huge savings if a loan is given through digital mode, and that is the reason why it has become much more popular. And the processing is fast and convenient, and loans are flowing fast to the informal sectors of the economy, that is small borrowers and also small entrepreneurs. So that is one good part of it. But the digital lenders are using the services of digital lending service providers, and that is where the crux of the issue comes, that they are not that much trained, and there are cases of lot of complaints of the borrowers about the pricing, about methodology of collection of loans, and systems related to that. That is why the regulated entities must conduct due diligence as far as engaging the digital lending service providers are concerned, that is intermediaries or the agents. So the recommendations of the working group on digital lending are grouped into three segments. The first segment is those recommendations which have been accepted for implementation, and those which have been accepted in principle, but they will take some time for incorporating them or adopting them in the digital lending space. And the third one is which requires some legislative changes and government support to implement them. So these are the three broad categories under which the recommendations have been grouped. These are further grouped into 4 segments, each of them, like those for implementation, those in principle accepted, and those which requires government intervention for the purpose of accepting them. They are again bifurcated into 4 parts. Those which relate to customer protection and behavioral part, that is conduct part of the lenders. And second is technology and data protection. That is also the second part. The third part is the regulatory framework, and the fourth is legal and institutional framework. So these are the 4 categories into which each kind of recommendations have been further bifurcated. The most important crux of the digital lending reforms can be in 4 areas. First and foremost, there has to be a clear transparency in the pricing of the product, and that is the reason why an annual percentage rate has to be worked out and shared by the lender with the borrower well in advance before the contract is entered into. That means the borrower should know very well how much he has to pay per annum for that particular product. And automatic increase in the loans which are now done on digital mode, that is prohibited. That means there cannot be without the consent of the borrower. There has to be a look-in period, means there has to be a trial period for the product which is offered to the borrower, and borrower should have the right to rescind the contract, to not to avail the loan, and to return the money without any charges. So look-in period is very, very important, and the lenders have to share a fact statement incorporating the annual percentage rate. So the point that is to be highlighted is complete transparency by the digital lenders, and the borrowers should be very well aware about the commitments that they are making as far as availing the services are concerned, and what will be the impact of it on the EMIs. So that should be very, very clear and transparent, and the loan should be credited direct from the lender to the borrower's account. There should be no pool account, or there should be no intermediary as far as the loans are concerned. It should go straight from the lender to the borrower's account. Even collection of loans, that is even the recovery of loans, should be same from the borrower direct to the lender, and no intermediary to be used. That is the due diligence, and the discipline has to be maintained. Look-in period, as we have discussed, and every service provider, that is normally referred to as regulated entity, that is digital lender. Every digital lender should have an internal ombudsman for the purpose of handling the grievances of the borrower, and that particular regulated entity should be able to entertain the complaints even against the agents who are used for the purpose of lending. So they should accept the complaints against the regulated entity, that is against the lender, and also the intermediaries who are used for the purpose of delivering the product. And the most important thing is, if the borrower is not satisfied with the grievance redressal mechanism of the regulated entity, and if the no satisfactory resolution takes place in 30 days, then the borrower can escalate the grievance to the RBI's internal integrated ombudsman scheme. So there is a Reserve Bank of India's internal integrated ombudsman scheme, that is RBIOS, that is integrated ombudsman scheme. So a borrower can go for the grievance redressal to RBI ombudsman, and it is the responsibility of the regulated entity to complete the whole grievance redressal process within 30 days, failing which the borrower can go to that RBI for redressal of. And all regulated entities, whether it is a bank or fintech company or a neobank or NBFC, any regulated entity which is using the digital lending mode, they should report to the credit information companies. That is CIC, credit information company the loan should be reported and repayment is to be reported to the CIC, that is credit information company, so that the rating of that particular borrower can be updated by them from time to time. And if we recollect, RBI earlier in the monetary policy has brought credit information companies also within the ambit of RBI integrated ombudsman scheme. So indirectly, every borrower has an access to the RBI's ombudsman about the conduct of the regulated entities who are providing digital lending on one side, and the other side, if the credit information company is not performing well and is not factoring the loan repayments and other things, and there is a problem, then that can be also escalated to RBI ombudsman. And as far as the information collection is concerned about the borrower, the information collection has to be, as far as possible, only which is required to take a credit decision. It should not be anything more than that. And at the same time, whatever is there has to be an audit trail as far as the data is concerned, and it should be collected only with the consent of the borrower. The data protection activities have to be undertaken very systematically, and the borrower should be aware about what kind of data is being collected and how it will be used, and whether it is essential for the purpose of taking a credit decision. These aspects will have to be taken care. So with the recommendations that are implemented right now by RBI for reforms of the digital lending, and with the in principle recommendations and those which are to be incorporated with the help of the government intervention, all these put together will be able to regulate the activity of digital lending so as to make it very transparent, borrower friendly, and pricing to be transparent, and there should be no harassment as far as collection of loans are concerned. That is, recovery agents should not use any kind of pressures, and they should follow the fair principles which have been issued by the RBI from time to time. And that is the very reason why these reforms have been brought into force, so that the activity is energized and the borrowers are made comfortable, so that the portfolio of digital lending, which is set to accelerate further as we go forward, because the way the digitization is entering into the banking field, so more and more people will be availing the digital mode of borrowing, and there will be a lot of spurt of digital lenders. So there has to be a systematic approach as far as the function of digital lending is concerned. So with this, we are very confident that the digital lending as a line of activity will be able to get streamlined and will grow further to the advantage of borrowers, and they will be in a better position to grow and form bigger part of lending activities of the regulated entities, and we will be able to get our if you are borrowing, you will be able to get on a transparent basis, with contracts very clear, with no fine prints and no harassment by the intermediaries, and we can look forward for a good and fine-tuned digital lending activities in India. So we will be talking more about the reforms in the banking sector in our coming editions. Please subscribe if you have not subscribed to the channel. Share it with your friends so that the very purpose of this channel is to disseminate knowledge, particularly to the youngsters, because the demographic dividend that we are having, the average age of Indian is 28.4 years. So that is the greatest advantage we need to tap to take India to developed economy. That is what is the aspirations of our country. So I think we will be part of it, and thank you very much for viewing the presentation. And any comments, please incorporate in the comment box so that we can respond, we can talk to each other. And thank you very much for watching.